Ever wonder how a company can report a drop in profit while actually performing better than ever? Welcome to the Bajaj Finance Q3 FY26 profit paradox. We're breaking down why a 6% drop in headline profit actually hides a massive 23% surge in underlying performance. Let's look at the numbers you need to know. Assets under management hit 4.84 lakh crore, up 22%. The total customer base reached a staggering 115 million. But here is the paradox. Reported profit is down 6%, while core profit is up 23%. This is a tale of two profits. The noise is the reported profit of 4,066 crore, which looks weak because of one-time provisions. The signal is the core profit of 5,317 crore. Management chose to fortify the balance sheet now, which artificially lowered the headline number. So what are these one-offs? To get from the reported number to the core performance, we add back a 1,406 crore accelerated ECL provision and a 265 crore labor codes charge. ECL stands for expected credit loss. Management essentially set a higher safety floor to protect against future risks. It's a feature, not a bug. The growth engine is crossing major milestones. Consolidated AUM has officially crossed the 4.8 lakh crore mark, maintaining a steady upward trajectory over the last 5 quarters. This 22% year-on-year growth proves that consumer demand for credit remains incredibly robust despite any market noise. Bajaj Finance is becoming a more efficient income machine. While revenue is climbing, the company's efficiency is also improving. The OPEX to income ratio dropped to 32.8% from 33.1% last year. Essentially, Bajaj is spending less to earn every rupee of income as operating leverage kicks in. The funnel is widening. In just 1 quarter, Bajaj added 4.76 million new customers. This brings the total customer franchise to over 115 million people. This massive base gives them a massive long-term runway to cross-sell loans, insurance, and investment products. Who's doing the heavy lifting? Mortgages handled through BHFL now account for 31.5% of the total book, with over 1.5 lakh crore in AUM. Meanwhile, urban B2C loans have hit nearly 1 lakh crore, representing steady and reliable core growth for the portfolio. The real star of the show this year is gold loans. This segment exploded with 94% growth compared to the previous year. AUM in gold loans has surged to 14,103 crore, signaling that Bajaj is aggressively capturing market share in the secured lending space. However, not every segment is sprinting. SME lending grew by a muted 11% to 51,136 crore. This reflects a cautious, safety-first approach by management in a potentially risky segment, prioritizing the health of the balance sheet over aggressive expansion. Let's talk about asset quality. Gross NPA is at 1.21%, which is slightly up from last year but remains strictly within management's guidance. The silver lining? The annualized loan loss before those one-time ECL charges actually improved to 1.91% compared to 2.16% a year ago. Bajaj is sitting on a fortress balance sheet. With a capital adequacy ratio of 21.45% and a net worth of over 1 lakh crore, they are well capitalized. This gives them significant room to lend and grow their AUM without needing to dilute shareholders by raising new capital anytime soon. It's not all sunshine. There are red flags to watch. First, the optics gap between reported and core profit might spook short-term traders. Second, the slight tick-up in GNPA bears watching. And finally, the cost of funds is expected to settle higher at around 7.6% for the full year. The final verdict? This is a constructive long-term buy. The 6% profit drop is a smart loss due to proactive provisioning. Core metrics like NII, AUM, and user growth are all up over 20%, and efficiency is improving. It's one-time pain for long-term gain. Did this breakdown help you see through the noise? The underlying engine at Bajaj Finance is healthy and firing on all cylinders. If you found this earnings deep dive helpful, make sure to like, save, and share this video. Follow and subscribe ZinvestZ for more such smart investing insights. Thanks for watching.